Good morning to everybody. My name is Elaine Kruger. I am the Regional Chair for the ASDSA for KZN. Thank you very much to Angelique, who's engineering everything in the background. I really appreciate you at all of our events. If I can please ask everybody just to take note of some of the house rules that we have displayed on the screen. We're going to keep you in mute, and then we're going to take questions from the chat box. We'll also take questions after the session. Today's topic is ETI. It has been, for a lot of people, a little bit more of a complex topic related to a tax incentive. I know that there's also been some controversy around it, and that SARS is in particular focusing very much on audits in these areas, and this is information that I'm getting from my clients and their experiences. And talking on the topic today and giving us a little bit of an education around it is Martin from SARS, whom I greatly appreciate. He's always managed to avail himself for information sharing sessions, and I do encourage everybody to reach out to him if you've got any further questions or anything that you may want to ask him that may be of a little bit more of a sensitive or confidential nature. But Martin, thank you so much again. I think in case we do have a couple of new people attending, it would be great if you could just intro yourself again, and then share with us on ETI and where it currently stands.
Okay, thank you, Elaine. Thank you for the introduction. Okay, good morning, one and all. Just to give you a brief introduction, my name is Martin Naidu. I'm actually joined with my colleague Mlungisi Dlamini. We're from the South African Revenue Service, and we're part of a department called Taxpayer Education. Our key aspects is to provide a lot of free educational tax workshops, just to make sure that everybody has a basic understanding and how to meet certain obligations that are required. Today, we're going to go through the employment tax incentive. If you have sat in our previous meeting or our previous session, we did cover the learnership allowance. Okay, so that is one incentive. And if we recap on the learnership allowance would have directly impacted the companies or the employers' income tax, right? So the ETI works slightly more different. There's more rules in place. So let's get into it and just give you a basic understanding of what ETI is, okay? So the purpose of this presentation is merely to provide information in an easily and understandable format, and is intended to make the provisions of legislation more accessible. If you look at the disclaimer, the information therefore has no binding or legal effect, and the relevant legislation must be consulted in the event of any doubt as to the meaning or application of any provisions. Okay, so points of discussion, we'll talk about what is ETI, we'll look at the qualifying employees, eligible employers, we'll look at the principles and the rules, we'll look at basic calculations of the ETI, we'll look at amounts that roll over and reimbursements, and we'll just talk about basically the submissions of the EMP 201, which is the monthly declaration for PAYE. Okay, so just before we get into it, just let me give you a background on why ETI was introduced before we go into the presentation itself. Would the unemployment rate had a very high peak, government had to look into a way where they would encourage employers to employ youth in South Africa. But the common practice and the common thinking about it is a lot of employers says, what was in it for me? What do I get in employment, in creating employment avenues? So that's why they introduced the employment tax incentive. For example, if you had to employ youths in South Africa, okay, somebody just leaves work or leaves school, ages of 18 and 19, they don't have much skills, they don't have much knowledge, and they send you a CV, and you go on your CV and you look there, there's no skills, there's no referrals. Very unlikely that that person is going to gain employment. Okay, so what generally happened is government had to implement incentives for employers to encourage them to employ individuals, give them some kind of income, therefore also gaining some skill sharing. So also, if you look at skill sharing as well, if you employ these youths, give them some skills, when they leave your premises at a certain time, you can either maybe retain them based on them being very hard-working employees, or alternatively, if they move over, at least they will have a notch on their CV to say, I've got this type of skills, I've worked in an environment, this is what I have. So that's basically why they introduced the tax incentive. So ETI is an incentive that may be claimed by eligible employers and is aimed to encourage such employers to employ young employees between the ages of 18 and 29. So that's what the youths in South Africa, if you're between the ages of 18 and 29, you can be considered as a youth in South Africa. And employees of any ages in special economic zones and any industry is identified by the minister by notice of in the government gazette. So ETI actually commenced in January 2014. Okay, so if you have a look over the years, from the time we implemented it, it's been successfully used, and we've seen a change in employers' attitudes in employing youth. So what they generally done is they've extended it so firstly, it was a 2-year program, and then based on the feedback that we have and the information that we provided to the minister, we felt that, we should extend it. And so they extended it up until February 2029. So that's what we call a sunset date. Most probably prior to 2029, end of February 2029, we'll look at it and maybe extend it for further years. Okay. The incentive itself applies to qualifying employees that were employed on or after the 1st of October 2013. Okay, so firstly, if you have employees that was employed on or after the 1st of October 2013, okay, and if the employer is legible, there are criteria that will be required to be met in order for you as an employer to claim the incentive itself. Okay, the payment of the incentive is effected by eligible employers being able to reduce the employee's tax due by them by amount of the employment tax incentive that they may claim, provided of the course that they meet the requirements of the Employment Tax Incentive Act itself. Okay, so generally with regards to it, if we go back to the learnership allowance, the learnership allowance decreases the income tax, but the employment tax incentive decreases the employer's monthly PAYE. Okay, so it decreases the PAYE, therefore the employer will be paying less PAYE and will retain a portion that they can utilize back into the business itself. Each eligible employer can claim a maximum of 24 months per qualifying employee. Okay, so if you have a look at the first slide, there's a lot of things that you can take off. Firstly, the ages. The employee has to be between the ages of 18 and 29. Secondly, they have to be employed after the 1st of October 2013. Okay, and you can claim up to a maximum of 24 months per employee. But when we go through the calculations, we'll talk about the rates, we'll talk about the tables. So it'll give you a better understanding on how it generally works. Okay. One thing you also need to understand as well is that if the company or the employer is situated in a special economic zone, for example, if you look at the KZN region, we have the Dubai Trade Port, and then we have in Richards Bay as well, we have a special economic zone. Okay, if the company is situated in that zone, then the ages don't apply. So even if you have somebody that's 35, okay, then yes, you can apply for the incentive according to the Act itself. Okay. So when we're looking at a qualifying employee, okay, we said it's an employee that's not less than 18 years of old, 18 years old, and not more than 29 years old. Okay. As I said, if the employer is operating in a special economic zone that's determined by the minister or a designated industry, then there's no age limitations for the qualifying employee. Okay. So there is a list of economic zones that you can go onto the website and you can pull through. Okay. Also, the employee has to be in a possession of a South African ID book or a refugee's identity document, or in a possession of an asylum seeker's permit. Okay, that's one. The next rule is that this employee cannot be a connected person. And when we talk about a connected person, we're talking to somebody who's related to you or related to the employer to the third degree. That can be the mother, the father, the son, daughter, grandparents, no relation to the employer. If that person is connected, then you cannot claim the ETI for that employee. Okay, so 3 rules: the ages, the special economic zone where there's no age restriction, the ID book, refugee ID document, and the asylum seeker permit, and not a connected person. Okay, more qualifying criteria: the employee cannot be considered as a domestic worker. If it's a domestic worker, unfortunately, the employer cannot claim that deduction. Okay, the other rule that we explained before: the employee has to be employed on or after the 1st of October 2013. Okay, so if you have an employee that you employed last year and you haven't claimed the ETI and they meet the age requirements, okay, and not connected, then yes, you can start claiming going forward for ETI for that employee. The other rule is the not less than 2,000 Rand or not more than 6,500 per month and paid less than wage. Now, so there is a restrictions on the income that they receive. These incomes, if you have a look, is actually below the income tax threshold, right? So those incomes are not subjected to tax, right? So if they fall within those income ranges, then they will generally be able to qualify for employee tax incentives. Okay. So we just covered the employees who's eligible. Now let's look at the employers. Okay. So an employer, firstly, they would need to be registered for PAYE, that's employees tax with SARS, and is one. If they not in national, provisional, and local sphere of government, is not a public entity listed in Schedule 2 or 3 of the Public Finance Management Act, is not a municipal entity, is not disqualified by the Minister of Finance due to displacement. We'll talk about displacement shortly as well, of an employee, or not meeting such conditions as may be prescribed by the finance regulator. So basically, we're looking at all government sectors, your non-profit organizations, your municipal entities. If you've not been previously qualified by the minister, okay, those entities are not allowed. Anything above that will be allowed. Okay, where it's been also we look at where it's been found that they have claimed an incentive despite not having eligible claims, they will face a penalty up to 100% of the total value of the incentive that they have received. Now, this is a very direct approach, because what we're saying is we have an act in place. We're giving you criteria that need to be met. And if you're claiming the ETI, now remember what we're saying, the ETI is decreasing your PAYE. Okay? If it's decreasing your PAYE, that means you're paying less PAYE and you're retaining more of an amount in your organization that you could utilize for maybe creating more employment. However, if we find you that you are utilizing these claims or these incentives for your own beneficial, that means you're putting through claims whereby there's no claim that's supposed to be put through. Okay, example, you're creating employees, ghost employees, you're claiming the incentive, you're paying less tax. We can impose up to 100% of the total value of the incentive that you claimed as a penalty. and there could be more implications to it. So it's very the thing that you actually understand before you start claiming for this incentive. You need to put your tick boxes in place. Am I allowed to claim? Is this employee a qualifying employee? Yes or no? Okay. So when we look at disqualifications for displacement of staff, okay, so the Act specifically addresses the concerns around displacement of employees by employers intending to benefit from the incentive. Okay, an employer may cease to qualify for the tax incentive if the resolution of the dispute, whether by agreement, order of court, or otherwise, reveals that the dismissal of the employee constitute an automatically unfair dismissal in terms of Section 1871F of the Labor Relations Act. And it must be found that the employee was unfairly dismissed in order to hire new qualifying employees to take advantage of the incentive. So yet again, we don't want the employer to now go and say, okay, hold on, I have employees that do not meet the age limit, so let me get rid of them and employ new employees, okay, so that I can get the benefit of the incentive. And if we find that out, what we will do is that for each employee that was displaced, SARS can impose a 30,000 Rand penalty for each employee that you displace, okay, just to benefit from the incentive. So it's important, as I said, yet again, make sure the incentive is for you to create employment, okay, decrease the unemployment, have skill sharing, but it's not there for you to go and fire people so that you can employ people and get the benefit of the incentive. Okay, remember, if we find that this has taken place, you can be disqualified from ever claiming the incentive going forward. Okay, so let's look at the calculation of the incentive and how it works and how you should work it out. So most bigger employers have payroll systems in place, and those payroll systems automatically can identify employees that would qualify for the incentive, but the information that is put into your payroll system will define whether that employee is qualifying or not. Okay, so if you're doing it the manual way, you will first need to go and identify all qualifying employees in respect of the month in question. Okay, firstly, you need to determine the applicable employment period for each employee. Okay, all right, then you got to determine the employee's monthly remuneration. Okay, remember, when you identifying these employees, the age is one of the requirements, not a connected person is one of the requirements, and the monthly remuneration is one of the requirements. Okay, so when you're identifying it, if the employee meets the criteria, okay, you need to also consider, have you already started claiming for this employee? Okay, because you can claim for a maximum of 24 months for each employee. Okay, so once you identify the employee, you identify the monthly remuneration, you need to calculate the incentive per qualifying employee, and then you will get a result for the incentive. Now, most employers will have not one or two, they might have a lot of employees. So they will have records of each employee. If you have a look at the new payroll systems as well now, one of the requirements they will ask you is date of employment. So you need to specify the date of employment on your payroll, because when they issue out the IRP5s, it's part of an audit trail. Okay, when working out the remuneration, the amount to be utilized to calculate the ETI, if the qualifying employee has been employed for 160 hours in a month, the actual remuneration amount paid must be used. Okay, if you have an employee that's that work less than 160 hours a month, the remuneration amount must be grossed up to 160 hours per month to calculate the value of the ETI. The amount can be calculated and be grossed down in the same ratio. So it's important when we look at a qualifying employee, remember, we will generally look at, for audit purposes, timesheets, or maybe you're logging, if you're working on a ticket system, whereby we can record employees' times to see if that employee is employed. Because generally what happens is we get employers that will just claim for employees, but we don't see a standard of employment. They're not working for the company. They're not even on premises. There's no part of a record of them working for them, but there's an amount being paid to them. Understand? So that's why we look at the 160 hours per month. If they work less than 160 hours in the month, then you need to cross it up as well. Okay, so this is just a basic example of how the grossing up will be. So if the qualifying employee was employed for 80 hours in that month and is paid 1,500, the remuneration must be grossed up to 160 hours to check whether the amount falls into the wage requirements. If the actual prescribed minimum, so you would get an instant whereby in certain industries, okay, there is a minimum wage limit, okay, and if there is a minimum wage limit that's been put in place and it's being regulated, okay, then we will allow that. So in this example, it's 80 hours, the amount is 1,500, so we need to cross it up to 160 hours, okay, so we're going to multiply that by 2 and we will get an amount of 3,000. So if this employee worked the full 160 hours for that month, then the amount will be the value of 3,000 rand. Okay, and it's generally would we look at the minimum wage requirements for that industry itself. Okay, so the monthly incentive. So this is the incentive what we're talking to about how you will qualify. In terms of the monthly remuneration, is defined in the Act as one, where an employer employs a qualifying employee for a month, means that the amount is paid or payable in respect of that month, or where an employer employs a qualifying employee for part of the month, means the amount would have been payable in respect of that month had the employer employed the employee for the entire month. This is where we're crossing up. The reason why I'm making emphasis on the employees is because you need to look at an employment contract as well, if under audit purposes, because we want to make sure that the reason that the person was being put in place is for the basis of employment. Okay, so that's one. Employment contract will be put in place. The hours also, we will need you to record hours as well if required. Okay. Also, if you look at the monthly remuneration as defined in the Act, when employer employs and pays a remuneration to a qualifying employee for at least 160 hours in a month, means the amount paid or payable to the qualifying employee by the employer in respect of the month, or where the employer employs a qualifying employee and pays the remuneration to the employee less than 160 hours in a month, means the amount calculated in terms of the Section 7(5). So this is where we talk about, yet again, 160 hours, crossing it up, crossing it down to make sure that we understand what was your remuneration for, or the monthly remuneration. Okay, so once you identify the qualifying employee, calculate the monthly remuneration, and you understand which month, whether you within the 24 months, then you take it towards the current table. Now, this is the new rates that is effective from the 1st of March 2022. Now, when they increased, when they looked at these rates, and if you compare it to the previous rates, unfortunately, it's not on the slide, but you can go onto our SARS website and pick it up. You will establish that they have actually increased the value. For example, this was 50% before this was an amount of 1,000 Rand before. So this is how the table works. Okay, if you are paying an employee within 0 to 1,999.99, okay, so for the month, and that's what according to the minimum wage agreement. Okay, and if that qualifying employee is in first time you claiming for this employee, 75% of that monthly remuneration would be the incentive for that. Okay, that's for the first 12 months. From 2,000 to 4,499.99 cents, the incentive would be 1,500 for that qualifying employee. Okay, the 4,500 to 6,499 we work with according to this formula itself. Okay, so if you identified an employee and you haven't claimed, then this is the first 12 months table that you'll do. From the 13th month going forward, so if you already claimed the 12 months for employee A, then when it comes to the 13 months, okay, if that employee A is still meeting the requirements of the qualifying criteria, then we use formula 2, which is for the second 12 months. So it's 37.5% of the monthly remuneration on the first tier, 750 Rand, which is a flat rate on the second tier, and we use the formula for the third tier. Okay, so remember, for each employee, the incentive will be calculated differently based on their monthly remuneration, based on the formula, whether using the first 12 months or the second 12 months. Okay, very important that you keep a record of how you calculated the remuneration for each employee. Okay, let's go through. So this is a basic calculation on how we would, or how the incentive would work. So we have an employee in April 2021, the eligible employer is calculating tax incentive for 2 qualifying employees. We got Mr. A and Ms. B. Their monthly remuneration was 1,800 for Mr. A, which is within the industry standard minimum wage. And then we got employee B, Ms. B, who's 5,200. So just look at it as if we're working in April 2022, right? So we'll use the current rates. Okay, so we've got Mr. A, who is in 4th-month employment, that they're giving us an indication that they've claimed for 4 months already for employer A, and for Ms. B, she's on the 14th month. So firstly, we look is they are qualifying employees. That means they meet the age requirements, they meet the monthly remuneration, and we will look at, according to this, how do we take it towards the table? So if you take the 1,800 Rand and we go towards the table, okay, so if you take 1,800, we in this field, we're going to work out 7.5% of the 1,800 Rand. Okay. Then if we look at the Ms. B, she's on the 14th month. That means they claimed for 12 months, they already 13, we're in 14 month, and her income was 5,200 for that month. If we go back to the table, we look at 5,200, and then we're going to have to look at the second 12 months formula, and we're going to use this formula for the calculation itself. Okay, so let's look at the results. So we'll take Mr. A, because he earns less than 2,000 Rand, he's in the first 12 months. We're going to take the 1,800 and we're going to multiply it by 7,500, which is 1,350. Ms. B is between the 4,500 and 6,500 bracket. She's eligible for the second 12-month period, and we take into consideration the formula. So if we calculate 1,350 and we add it to the incentive for Ms. B, this employer for these 2 employees would have been able to claim an incentive of 1,837 Rand and 50 cents for this employer, for these 2 employees for that month. So for example, if the PAYE was 10,000 Rand, it'll be 10,000 Rand less the 1,837, and the difference is what the employer would be required to pay to SARS for PAYE purposes. Okay, let's look at example number 2. Now we have Tony's spare shop. He hires 4 employees. We have Stephen, that's 24 years of age, is in a 14th month of employment. His salary is 4,300. We have Dorothy, she's 34 years of age, salary of 5,500. We have Celeste, 28 years of age. Celeste is actually Tony's daughter, and she gets a salary of 3,300. And then we have Kevin, age 19. He's 9 months into employment, and his salary is 2,500 rand. So if you look at this, and we just look at the qualifying criteria, firstly, we look at Stephen. He meets the age requirements and he meets the salary. So we will tick there. So he'll qualify. Dorothy, unfortunately, she's 34 years of age. She's more than 29 years of age. So she will automatically be disqualified. You won't be able to claim for her. Celeste, because she's connected to Tony, so she's a connected person, so she will automatically be disqualified. Kevin, he's 19, he makes a requirement and his salary. So we look at calculations between Stephen and Kevin. They're also telling us here that the employee's tax, and it means the PAYE that they would have calculated for the month would have been 10,000 Rand. So we calculate his employee's tax incentive on the following. We already identified Stephen and Kevin to qualify. Stephen will look at a fixed rate of 750 Rand. And we looked at Kevin of 1,500. Total incentive for the month for the 2 employees was 2,250. And if you take it against the PAYE that the employer was required to pay, this is how much of PAYE that the employer will pay, of 7,750. So these are just basic calculations. If you're working on a payroll system, they automatically will work this out for you based on the criteria itself. Okay, for those that are doing manual, then unfortunately you'll have to keep records of each employee that you're claiming for. All right, so you're going to have an instance, okay, where sometimes your incentive amount, okay, the tax incentive that you have is going to be higher than your PAYE. For example, maybe you calculated an incentive of 7,000 Rand, but the PAYE for that month would have been 5,000 Rand. That means if you set the 2 off, then you would have a credit of 2,000 Rand for the ETI. So you have 3 instances where the incentive amounts available may be rolled over. Okay. Firstly, if the incentive amount available exceeds the employee's tax, otherwise due in the month, the excess may be carried forward to the next month within certain limits. So you can claim you can carry over the amount to the next month. This is your brought forward amount. Secondly, where the incentive amount is available, however, the employer does not reduce the employee's tax by the incentive amount, be it for whatever reason. Say maybe the wage clerk forgot to deduct, so you would have an instance you can have a rollover amount. So maybe in that month the employer did not calculate take into consideration ETI. They took the ETI in the month going forward and they included it there. Okay. Thirdly, if the employer was not allowed to reduce the employee's tax payable due to tax returns outstanding or SARS debt incurred, the incentive amount may be carried forward for future years. So ultimately, in order for you, and the system is now designed, if you're doing your employee's tax electronically, if you are non-compliant with SARS, okay, maybe PAYE or you have outstanding amounts owing, then you will not be allowed to claim the incentive for that month. Okay, the system will gray out this your PAYE and not allow you to include the ETA amount. So that means if you make yourself compliant in that month, then the following month you can include the ETI in that. Okay, any excess employment tax incentives amounts can be rolled over from one month to the other. If the monthly calculated ETA amount claim exceeds the gross employees for the specific month. The excess ETI will be carried forward to the next month, and the ETI amount will be rolled over to an extent that your net PAYE is zero. So that every month you're not paying the PAYE because you have an excess ETI and which you're rolling over to the next month. Okay. So any excess employee tax incentive can be rolled over from month to month in the following instances. If monthly calculated ETI amount claimed exceeds the gross employee's tax for that specific month, that means in that month there's zero PAYE. This carried forward ETI amount from the previous month becomes the brought forward ETI amount from the next current month. So basically what happens is if you have an excess of ETI this month, you can carry it forward to the next month. In the next month's EMP 201, that amount will be now considered as the brought forward amount. Okay. Rollover provisions are also applicable where the employer was not allowed to reduce the employee's tax as a result of non-compliance. I've explained that to you. Okay. The employer also might have omitted to claim. You can claim that amount into the following month. But remember, you need to keep accurate record of the ETI calculations for each month. If you didn't claim it in this month and you put it into the next month, you got to show the calculation and how you arrive at that bigger amount. Okay. Okay, so in the following example, we have a period from March 2019 to August 2019. Employer had 10 qualifying employees. However, only claimed for 8 employees for the month of March, April, May, June, and July. This omission was discovered in August 2019. ETI claimed for these omitted employees can be claimed in the EMP 201 for 2019. If this omission was discovered during the 2019, the employee and the EMP 201 for August was already filed, then you would not be able to claim the ETI and it'll be forfeited. So what it's saying is our tax years for PAYE purposes starts from March up until February. So from the 1st of March up until end of February will be your tax year. So for example, 1st of March 2022 up until February 2023, that will be your 2023 tax year. So what will happen? We work on a 6-month period. So those, if you have a look, those employers that submit what we call a reconciliation, we'll see that you need to do a biannual submission and a full year submission. Your biannual submission will cover the periods of March till August. Now, if you did not claim your ETI from March to August, okay, you can't go in September and claim the ETI because now you're going to forfeit that amount. Okay, so it's important that you keep accurate records of it. You need to make sure that you're claiming in the correct month, because if you do not do so within the required time frame, okay, then the ETI will be forfeited. Okay, although you deducted it or you claimed it, you can't put it through because you haven't effectively declared that to SARS. Okay, so we would look at reimbursements. Okay, so we would have looked and we have identified that we would have instances where we're going to have a continuous rollover of ETI. Now, if you have a continuous rollover of ETI within a specific period, what we generally would do is that we will reimburse you the ETI. That means you have a brought forward amount, and we will allow that. So if there's no employee's tax to settle against the ETI amount, the employer is entitled to a reimbursement of the total ETI amount available at the end of each PAYE reconciliation period. So example, we have biannual submissions. From March to August will be your first 6 months. Say come August itself, and you have a carry forward amount. That means you have additional ETI that you're going to carry forward, right? What we will generally do is when you do your reconciliation for the biannual and we see that there's a credit, then we will refund you that ETI incentive. Okay, we'll refund it to you. All right. That means when you come to September, when you start September will start off as a zero amount. So it means you don't have a brought forward amount for ETI on your EMP 201 for the month of September. So at the end of August and February, so your biannual is August, your end of February will be your for your full year. Okay, so currently, if you have a look at it, the current full year reconciliation started on the 1st of April this year and will end up until the 31st of May. So your employees are required to submit a reconciliation for a full period by the end of May. So what will happen is once a reconciliation period starts, if there's a credit, then there will be a reimbursement. The reimbursement will not be paid to the employer if the employer is tax is non-compliant. So if you're non-compliant, you cannot, we're not going to refund you. Okay, the employer has until the end of the next reconciliation period to rectify the non-compliance. We're giving you a period to remedy your non-compliance. If you do not remedy your non-compliance within that period, then you're going to forfeit that incentive, the refunded amount. So yet again, we want you as an employer to be compliant with SARS 365 days in a year. Okay, so if you want these incentives, you need to be compliant. If you want to be refunded the amount, you need to be compliant as well. Okay, so when we look at the monthly declaration, okay, so your monthly submissions is your EMP 201. This is your monthly declaration. On this declaration is where you will declare your PAYE, your UIF, if you register for SDL, your SDL amount. On the EMP 201, you need to also include if you have qualifying employees that you are claiming ETI. So you need to take into consideration the ETI calculation. You also need to take into consideration as well when you're doing your brought forward amounts. Okay, once you do on the EMP 201s, as I said, is monthly declarations. Then your EMP 501s, that's what I talked about, your reconciliation periods. This is your EMP 501s. This is inclusive of your IRP5s, your IT3A certificates. You have your biannual submission and you have your full year submission. Okay, so all these have to ensure that these are submitted in order for you to make sure that one, you're compliant, and for two, for us to allow you to claim the ETI. Now, remember, yet again, make sure your ETI claims are valid claims with accordance to what the Act prescribes, because as I explained to you, you could get up to 100% penalty or for each for up to 100% penalty against the claims that you claimed against, but were not required or were disallowed. Okay, this is what the EMP 201 generally looks like. This is just your contact details page. It's important that if you are the individuals or completing the EMP 201, make sure your contact details are correct. Reason being is that if there's any information that SARS required, maybe an auditor needs to get hold of you. Maybe we need to see clarity. Maybe we see extensive or amounts liability exceeding liability. So your liability amounts are different. We need to make sure that was it an error? Is it correct? So we can allow that assessment to go through. Okay, so important contact details are very important. Email addresses are important as well. If you're doing this monthly declaration via e-filing, all correspondence are emailed or uploaded onto the SARS e-filing system under your SARS correspondence itself. Okay, this is a basic overview of how your PAYE is set up. So there's your payroll tax calculation. So this is your PAYE liability. This is what you'll get from payroll if you're doing it manually. Okay, if you have ETI amounts that you're carrying forward, you're going to complete it here. Okay, if you see that the fields are grayed out, that means you're not allowed to put in information there. Either one, if it's grayed out, that means you don't have anything that was brought forward, or alternatively, you could have been non-compliant, and that's why the system is not allowing you to claim, right? So remember, as I said, it's your PAYE less your ETI, okay, will give you your PAYE payable for that period itself, okay? Then you also need to look at your SDL, you need to look at the ETI that you calculated, okay? Then you got your UIF as well. So ultimately, you will have to take into consideration the ETI calculated and the ETI that was utilized based on the amount payable there. And then you have your total amount payable for that whole period. If you have an ETI amount that you're carrying forward, it would reflect here. Remember, your ETI amount carried forward will be your ETI brought forward amount in the next month of your EMP 201. Okay, this is just a basic overview of how it works. Remember, the PAYE less the incentive gives you your net PAYE, your SDL, UIF, okay, and your total. And then remember, if you submit or you make late payments, then they can impose a 10% penalty on the amount itself. Okay, so important that you keep records of that as well. All right, so what does the employer need to keep a record of? Okay, and this is important because based on the fact that SARS now, we have risk engines in place whereby we can see a lot of employers claiming back or claiming against the ETI. We're not saying the employers have valid claims, okay, but we need to verify if it's correct or not. So what we would want is, firstly, it's important that you have an employment contract in place. So we can identify, one, the start date of the employee. We also want to identify the salary amount of the employee. Okay, the amount of employment tax incentives calculated by for each employee. We need the employee's ID numbers. We need the employee's tax numbers. Tax numbers are very important. It's mandatory. It needs to be included on your payroll. It needs to reflect on the IRP5s or the IT3A certificates itself. Okay, and if, for example, if that employee or if the company is situated or they're working in a special economic zone, we need details of where the employee works. Remember, to reiterate, if the employee or an employer is situated in a special economic zone, then the age restriction does not apply. Okay, important to know that. So records that we need to have. Okay, so generally that's about it from me. It's a simple application of the law, of the act itself, simple rules to follow that you can go through and make sure you have a tick box in place. You can always go onto our SARS website and you can find more information, detailed information as well. Okay, with that being said, that comes to the end of the presentation. Thank you very much. Going to go through, firstly, we'll go through the chat box firstly, all right? And once we do the chat box itself, then we will allow questions to come through by raise of hands, and we'll acknowledge you and we can go through. All right, so let's look at the first question from Solomon. I would to find out if a X person is placed on a learnership, is it possible to claim ETI? Okay, so this is a question that comes up a lot of times. Okay, and it goes back to what I've tried to stress about the employment contract. Is the employee is employed? Is there remuneration? Do you have records of them meeting the 160 hours? Okay, if they have all those criteria, so you could get somebody that's in a learnership, they're part of a learnership, so you're claiming the learnership allowance for them, but you put them in an environment where they are working, okay, they are employed, they're remunerated for the work, what they do, and you can record that they've been employed, then yes, you can claim the ETI, okay? let's look at Renee's question. Can an employer of yes for youth employees claim ETI? So I unfortunately, Renee, I'm not going to be apologize on it. That I don't know what yes for youth is. If you can maybe explain that to me, and then I can maybe then give you feedback on that.
I think what she may mean with regard to yes is a limited duration contract for us. So, for example, would a 12-month limited duration contract qualify if the employer and employee are eligible?
Yes. So there's no definition on the time frame. So yes, if you got the employee on a 12-month period, understand? So example, you know that they're going to be in employment for 12 months. They meet the requirements. They part of your payroll. You're remunerating them. They're working in the environment. That yes, you can claim the ETI, provided that you meet the age criteria and the remuneration criteria. Yes.
Okay, fantastic. And then Robin has a question. What happens if you are processing the payroll for learners on a learnership, but the employment contract is not with you? It is with an external client who pays you to pay the learner. Oh, okay. So this would be a scenario where the client hands over full responsibility of the students to another organization, either a recruitment company or a training provider, for example, and says, please, can you put learners on your payroll? Can you put them in a workplace to ensure that there is a workplace experience that's happening and if it's for a learnership for the duration of the 12-month period? Who in that case is entitled to claim the ETI if the employer with the employment contract is not managing the payroll, the IRP5s, the EMP201s, etc.?
Okay, so basically we need to look at and if you go look at what we call a lead employer, if we use the terminologies from learnership allowance, right? We need to find out one, who's the employer and who's the employee. Okay, so if the employee is, for example, under my company, okay, I've got an employment contract with that employee. The employee is remunerated by myself as Martin, and I have records of this employee working in my organization, then I would be the employer that would be allowed to claim the incentive, provided that they meet the criteria. Understand? So they are on my payroll. So the most important thing here, and that's why you'll see a lot of audits going through. It's just that, remember when you're doing your EMP 501s and your 201s, your 501 specifically, for the IRP5s or the IT3A certificates, because you're paying them less than the threshold. We need records of times of how long that employee worked for you. And that's why when we go for an audit, we need to look at your record of employments. We need to look at if you've got maybe something in place to record their times to say that they are employed for you. Because most cases you're going to have an instant, and this is where a lot of people put into place, is that sometimes you might have an employee, but that employee is not based on your premises. You just pay them a stipend. You're just paying them a stipend. Now, all the stipend is considered as part of gross remuneration, understand? But that stipend is just paying them to go or to just pay for incidental cost. But that individual is not physically employed in the organization, understand? So that's what you need to look at as well.
Okay, all right. Is there any way, for example, that we can obtain, because I think the buck stops at the end of the day with the auditors, and so where would we find a sort of an audit checklist so that it doesn't leave anything open to interpretation, so that we are very clear in the event where there's a lead employer, a host employer, and then an outsourced payroll company.
Yeah. So basically, if you look at, I'll send you the copy of the slide now, right? And the records of when the records are talked about the start date of the employee, the salary amount, the employment contract, the amount of the incentive calculated per employee, their details. So that's basically what your audit trail is. That's what the auditor will look at. In certain cases, the auditor does ask for in-depth or detailed payrolls, specifically in larger companies, because they need to look at, okay, larger companies, because they have very high staff turnover, okay, so they will generally claim incentives for most employees that meet the qualifying criteria. But we need to go, if they do an in-depth audit, then they might ask for payroll information as well. So it's basic information. One, employment contract, your details of the employee, the remuneration of the employee, and how you calculated the incentive per employee. That's generally what we would look at. And then the ID numbers and the tax numbers and so forth. But that all those information now is fed into a payroll system, or is now required on the IT3A certificate or the IRP5 information. Because on those, it identifies which employees you claim the ETI for and which employees do not qualify for ETI.
Okay, all right. And then Melanie just wanted to confirm that a fixed term contract will also be applicable, long term or short term.
Yeah, remember the criteria, as I said, and it's the same thing. Is if you employ somebody, say for example, you got awarded a tender, for example. I'm going to use it in that terminology. You awarded a tender. It's a short-term tender. Your contract says that, you know what, I need you to do work for me for 6 months. So for that 6 months, that employees will be, you can claim their incentive for those employees. Yes.
Okay. All right. Fantastic. Are there any other questions? Anybody who would like to raise their hands and contribute or request information? Nothing. All right. Super duper. Martin, thank you again so much for putting all of this information into layman's terms for us. And we look forward to hosting you again in the future.
No problem. Thank you very much, Yulaine. Thank you the rest of you for allowing me to speak. Hopefully I'll see you in the future as well. All right.
Absolutely. And my sympathies to everybody who joined from the KZN regions with regard to the floods and loss of anything that you may have experienced. The team at ASDSA, our thoughts are with you, and ask you just to hold your head up high. This too shall pass. Okay. Thank you so much, everybody.
Welcome. Take care. Bye.
Bye-bye.